The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right there, folks. Welcome on here to the Diagnostic Trading Hour. And so looking at everything, checking out where the markets are at right now. And what I can see is we got the S&P is up about 3 points right now. We have the Nasdaq up 1 point with the Russell up 1.8. The Dow's up 53 with gold up 21 point, or down 21 points on the day. We got silver currently down, huge down, 0.444. That's a massive, massive move on silver. We got copper is down 0.002, and we got oil down 72 cents. Natural gas is currently up 0.03 with corn down 7 points and soybeans down 12. Euro dollar is currently down 8 pips with pound dollar up. That's right, up 62 pips. Aussie dollar is down 29. Euro yen is down 38 with the US yen down at 19. Pound yen is up 20. Dollar CAD is up 15, and dollar franc is up 15 pips as well. So I got a little bit of market movement. Some things moving a lot, some things moving a little, just like each and every day. And just looking at the markets overall, trying to see what all we can take advantage of. Let's go ahead and check out right now what's coming up on the news coming up next week. Okay? So on the news for next week, and starting to take a look at this, we're going to have, looks like, the meeting minutes on Monday coming out of Australia. So that'll have probably, a little bit of volatility right there. They'll also have new motor vehicle sales coming out at the same time. That's going to come out again 9:30 in the evening on Monday. There's really nothing happening on Sunday. Japan does have a holiday on Sunday, so be aware of that if you're a weekend trader on the Asian currency pairs there. Let's look on over and check out what we got going on Tuesday. On Tuesday, we're going to have a lot of pound announcements coming out at 4:30. The main one being their CPI. So on Monday, I'll go over the stats with you on that one. We'll put the pieces together. We also going to have the PPI, the RPI, the core CPI, the HPI, and the PPI output. So 6 different announcements at the same time on the pound. Should get some good volatility out of it. We're going to have the German Zoo Economic Sentiment Report. Probably give you a solid 20 or 30 pip move on the euro there around 5 a.m. on Tuesday. And then we'll have manufacturing sales and core CPI manufacturing sales coming out of Canada, core CPI coming out of the U.S. Might make for a good trade. I'll pull up all the stats, and I'll get you updated on that, so you'll be ready for that trade on Tuesday. I'll let you know on Monday how the stats come out, and if there's a good news trading opportunity right there. But those are the high-impact announcements for Tuesday. Next Wednesday, we're going to have the asset facility votes and the bank rate votes coming out of the pound. So don't really expect a lot of volatility on that. No big surprises. But if my stats show otherwise, I'll let you know. We got building permits coming out of the U.S. at 8:30. So you could look at copper as well as potential currency pairs, along with housing starts coming out. So all that information, of course, can affect copper because you need copper to build homes for all the plumbing here in the U.S. And then at 2 o'clock on Wednesday, we're going to have a FOMC statement coming out. That's right. So last week we had all the big interest rate statements for all the other countries. We're going to have the FOMC one next Wednesday. So federal funds rate, statement, all that should make for some great volatility. I'll definitely have a lot of stats for you. And then, of course, the press conference for the FOMC coming out 30 minutes after that. And this one's going to be, people are going to be looking at it, with all the different reports coming out. We don't have a press conference scheduled for October, so it's definitely going to be the highlight one between this month and next month. And let's see, we'll have the GDP coming out of New Zealand. And let's see, China will be on holiday on Wednesday. So just something to be aware of. That's a little bit of volume there. And then hopping on over to Thursday. Governor Kurata is going to speak sometime Thursday. So expect that to add some volatility early in the morning on the yen. And then we'll go into the LIBOR rate and the monetary policy assessment over at the franc. Swiss franc right there at 3:30, so we'll get some nice Swissy there movement. And then we'll have, we're going to have pound, we're going to have retail sales at 4:30. We'll go on into current account and unemployment claims. Usually not a big mover unless it's a big shock happening on Thursday. And we'll be starting to wrap up the week there on Thursday, 10 a.m. We're going to have existing home sales and Philly Fed Manufacturing Index both at 10. So that ought to provide us some potential butterflies as well as maybe some straddles or strangles as well that we can do over on Nadex. And then Friday, Corrada's going to speak again, so more Japanese currency yen, volatility being caused there, and the core CPI and CPI on the CAD. So it's going to be a nice week. We'll have some good news. Not gonna be like last week where we had a ton, but we'll have some good news. We have some big news with the FOMC. So looking forward to some good volatility on this up and coming week. So what about what happened today? All right. Well, what did happen today? Well, we had some numbers come on out this morning, and if I go over, I'll pull those up. I'll read them off to you so we can check them out. And this morning we had the core retail sales, the PPI, the retail sales, and the core PPI all come out at the same time, and they all came out on the dollar there. 3 out of 4 were worse than expected, and one number was revised up. So, but again, they were worse than expected. And let's go into, I had some stats that I called out for you. We went over these this morning, but just in case you missed this morning's show, we go ahead and lay out. I actually had one of the traders, and I love to share it whenever we get traders that, share the stuff on here, the stats and how they played the trades. Let's go ahead and pull up the euro dollar, and we'll look at how that trade played out. Because this is not a trade where you're trying to read charts. It's not a trade where you're trying to pick direction. It's not a trade where you care what direction it goes. It's simply a trade based on you thinking the market will move at a certain time, and it's not even your opinion. The market will move at this time. So you're putting a lot of things in your favor, and but the one thing you do need when you do this is you need some stats, and you need a plan on how you're going to take advantage of it. And so what stats did we have? Well, I went in and I looked at the retail sales, and wasn't necessarily the strongest report. We were getting about a 30, 40 pip up or down move, but that still was enough to actually take a nice profit. And so the rules were basically we're looking for less than the $41 risk. We got a lot less than that. And also the expectations were a move, of 70% of the time it basically hits 50 pips from high to low after the movement, with an average move of 62 on the euro dollar when the retail sales number comes out. And these are stats based on the last 2 years. So knowing that, what can I do? What could I have done? What did other traders actually do? And so I'll share with you one of the trades that came through. Like I said, from Mark, he sent over a screenshot on his trades that he put together. And thought he did a really, really good job on this. And he was actually able to make money on one side and actually break even on the other, so it increased his return. And he went in over here, and he did 2 contracts, okay? He did a straddle. And shortly before the news announcement, at about 8 o'clock, 8:10, something like that, he went in, and he bought the 31.80 to 32.80, which was great because the market was just sitting right there. And all the way up, let's see here. So let's go in and let me shrink that. And let's go 32.80 right over here. Okay, on up to 33.80. And he chose the 10 a.m. expiration. That gave him a solid hour and a half for the market to move. And if we go in, and then he bought that one. Okay, and he sold. Oh, moved that, didn't mean to. Let's see here. Copy, paste, there we go. And he sold the one right below it down here. Okay, 32.80 down to 31.80. What did he buy this one for? Well, he bought this one right here. He got a buy price. He got a fill of 30. Let's see, 33. Looks like I want to get the right number for you. 32.93. Okay, so he bought this at 32.93. And then he took this one and he sold it for $32.75. So what does that mean? Let's pull up some real basic calculators and just show you the risk on the trade and how small it really was. And it's really cool. You actually really can trade. You can trade big or you can trade small, but it's cool how you can actually trade these smaller sizes if you want to. And again, this is Nadex spreads. So if we go on over here and we go, okay, well, if the buy was at 32.93, so 1.3293 minus the floor of 1.3293, $13 risk per spread. And then he went over here and he sold. So he sold the 1.3280 minus, we got a sell price of 1.3275. So a 5 pip risk. So our total risk on the two trades was $18. Okay? So not bad at all. And right there, so just again, $18, so 0.018 being our total risk on the trade that he was able to, pull off there. Well, then he went in and he put in a take profit order. He knew he had an 18 pip risk. He needed to make at least $18, okay? Net profit. So what did he do? He went in, he bought this one, then he sold it higher, of course. So that was the goal there. And he sold to close it at 33.16. So if you go 1.3316 minus, and the buy price was 1.3293, you have a profit of 23 pips on that trade. And then if you go down here on the sell side, he actually closed it for the same price. He sold it for $32.75, and he bought it back for $32.75. So we had a $0 loss on that side of the trade. So just a perfect trade because there's like no loss here. He ended up 23 pips up on an 18 pip risk. So, a nice reward. And that's not including fees, but 0.023 divided by 0.0018. That's a 127% return on his money in a matter of, he opened the trades at, 8:04, closed them at 8:38. And how does this trade work? So let's put a couple things on here and just show you, just like looking at the arrow. So the market comes out, or the news comes out right here. It's like he puts the trade on, and then right around 8:30, it starts going a little nuts. It flies up, okay? He takes profit right there again. He sold it out at 33.16, so just a few pips higher, and he could have lost on that side of the trade, but he actually was profitable on the side of the trade, flew on up, and he closes out, takes profit. This one down here is down, it's 5 pips. It's not worth anything. It doesn't matter. He doesn't care. He's made 23 pips. He's lost 5. The net right there, 23 minus 5 is what? That's 18. He's at a 1-to-1 risk reward. He's made $18 for his $18 at risk. He's going to walk away with 100% return on that trade. Well, then the market turns around, and it goes on back down. He closes the one that he sold. He buys it back at 32.75. So when it comes on back down here, he shuts it on down. He's like, hey, if I get out of that break even, that just increases my return all the more. So very cool trade, and we like to do these throughout the week. It's one of my favorite trades to do on Nadex because you know what time, very short time required to do it, and you know what's going to move and when. All right, stay right there. We'll be right back after this break.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors.
TFNN is having an open house in the Tiger's Den for 2 weeks, and the best part is that everyone is invited and you just have to be a member at TFNN. The open house in the Tiger's Den has already begun and will last through our week-long virtual trading competition, which ends September 13th. Use this time to exchange trading ideas with other traders in the virtual chat room and to discuss trading strategy. For all the information and to take part in the Tiger's Den open house, log on to TFNN.com today. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, welcome on back here to the Diagnostic Trading Hour. So we're just looking over a few different things and checking out where everything's at the moment. And let me see here if I can pull a couple other things up for us to look at that, we might be able to use. But it looks like that basically sums up the spread strategy. Okay, what it is, you're buying a box above it with capped risk. So it can only lose so much money going down. In this case, it can only lose like 13 pips if the market went down. You're selling a spread with capped risk. It can only lose 5 pips if the market goes up. So my total risk on the trade is 18 pips. That can be $18, $108, $1,800, however big you trade. Then what we're doing is we go, okay, well, one side is capped. Both sides are capped on their risk. So when it goes up, one side will stop losing, the other side keeps making money. So if that side will make the risk back from the other side plus the total risk, then you have a 1-to-1. So if I can make $13 plus $5, that's $18. If I can make a net $18, then that puts me up 1-to-1, and that's actually what happened on this trade. We were actually able to make $18 on the trade. So sometimes even more. And then it goes down, it comes on back down, and we were able to close the trade at the bottom down and get all that money back as well. That just increases our return on investment all the more. And so this might be new to you, but we do a lot of these. We talk about these on the air. I've done it multiple times. And also we use the spread scanner, which makes it a lot easier because you can see all the pieces put together. So you just go over here and check it out. You can get the free trial if you haven't tried it out yet. Right here on TFNN.com. Just scroll on down and click on the diagnostic box spread scanner. Click right there, and then you can pull it up and see if there's any good trades. Now, when you log in, there's a tutorial section that gets you started. There's a question section. Ask me all the questions you want. And but you go to the scanner here, say 30 minutes or so, and maybe even sooner, depending upon the best time for the news, but 30 minutes before the news usually. And you go over here and you pick your market, whichever one that is. So let's say we pick euro dollar, and then put 1-to-1 for the risk-reward ratio. This is just for spreads, okay? And then put $100 max risk. That's the only thing I want. So just in case you have something in there, hit reset filters, and just type 100 in the max risk, type 1 in the risk-reward ratio. Scroll down, you'll see what's here. You need to find a couple things that have the same floor and ceiling, and that are ideally where the market is. So it's straddling the market. And so, I can look at, say, like this 3 o'clock one and this 3 o'clock one. Look at that. See, that's a nice straddle right there. That straddle would only cost you $13. Okay, for this straddle. And you have the potential of up to $241 on either side. Now, I'm not going for the home run. Okay? You can be a gunslinger, go for it, see if it works for you. But one thing you'll notice really quick if you watch news is the market will fly in one direction and then fly back in the other, and you can really miss out. Okay? So I'm going in there for like a 1-to-1. If I can make a 100% return in 30 minutes, I'm okay with that. So, and it may not sound like much. $8 plus, $5, $13, you can make $13. Whoop-dee, do 10 of them, do 20 of them, do 100 of them. Okay? Make $1,300 in 30 minutes. So, now, of course, you could lose it, too. You have an hour and a half on the trade, yet till 10 o'clock. If it expired, like, right dead in the center, you'd have max loss. Now, it'd have to expire right in the center, okay? And I had a question in the den. What about the fees? Well, that's one of the cool things about Nadex is there's no broker commissions. There are exchange fees, but the exchange fees cap out. So if I do one contract, it's 90 cents a side, okay? And if I do 5 contracts, that'd be $4.50. If I do 10 contracts, that'd be $9. But if I did 100 contracts, guess what? $9. It caps at $9. And that is there's no extra clearing fee or broker fee. Brokers make you go broker type thing, right? So all you got is the exchange fee. And the exchange fee caps out at $9 an order. So if you submit one order for, buying this thing at $32.98 for 100 contracts, you get filled, bam, done. And that's the trade. And you only have to pay $9 on the fees, which, what would that, that comes out to fractions. So a very, very small, 9 cents a contract or something like that would be what your fee would be. So it's pretty cool. It really doesn't, the bigger you get, actually, the less the fees impact you. And you don't have to have, there's some programs out there where you have to have a certain level of trading in order to, achieve, high volume trading in order to achieve lower fees. You don't have to have that. You go in on day one, boom, you get that discounted rate. You surpass 10 contracts in a single order, it's $9 flat. All right, stay right there. We'll be right back after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, come on back here to the pardon me, Diagnostic Trading Hour there. And so this is putting up a risk-reward graph on the euro-dollar. And as you can see, we got the price as it moves up or down, and we got the P&L up and down. And so it shows you how you can make money if it goes up, but notice how the yellow one stops losing here. And it shows you how you make money if the market goes down. And notice again how it stops losing right there. So that's it. It's really that simple. You don't have to make it harder than what I just showed you, okay? And the scanner helps you do all the math instead of having to go in and search through all the different spreads and see what's available and try to find something that lines up and, maybe messing the trade up. I mean, you got other choices here as well. You could look at that one. It's a possibility. See how, though, on this one we have $22 risk and $3 risk, but look where the market's at. That's what that gray dark line is it's showing you right here how this is where the market is. So this one's like deeper in the money. And this one right here is out of the money. Not a big deal. Usually one's in the money, one's out of the money. But it's a lot deeper in, so it's going to have to move a lot further in one direction. Not always a bad thing if it's within your risk requirements. But that's a pretty big move. So this is probably, either you're going to make money or you're going to break even on this trade, most likely, depending upon how far it moves in either direction. But if we drop that off and we add this on, then you can see you get a lot, you can get better trades depending upon the distance that you have to travel. Like this one only has to move 3 pips. That one has to move, 3 also. But down here we got 3 pips and 15 pips. So you can just start lining up the different ones, and you go, that one's not good. Look how that's deep in the money right there. So we get rid of that one. Look at the 3 o'clock one. You can start adding them up and seeing where things work for you. But what you're going to find is the lowest combination of break-even distance and risk is going to be your preferred spread with the longest amount of time till expiration. So if you were doing a straddle trade right now, you wouldn't really have a need to. Being a Friday, euro, dollar is probably pretty done. But this would be the trade to do because it gives you the most time, it gives you the smallest net break-even distance, it gives you the smallest net risk, and it gives you the largest profit potential without doing any math. Just, I mean, I guess you have to do maybe a little addition if you're doing a straddle, right? You got to add, 12 and 3 or whatever. So, but that's pretty much all that's on there. And, you just select the different trades, and you can combine them up, and you can analyze them, and make different ones as things move forward. Now, that's one of the trades that we can do. We can also do some inverted trades like butterflies, and I do those over on the binaries. Okay, so I'll go in here and I'll put a really simple, just reset your filters. Go in, put 65 to 95. This is sort of like the premium collection trades. Okay. And then I'll narrow it down to ones that are expiring within whatever time frame. Maybe I want 4 hours, 6 hours, 2 hours, 1 hour, whatever. And so I'll pull that up. I'll choose my market, and it'll show me what qualifies. And I'll have to, I may have to search and find the best market that's going to qualify for what I want. Here's one that's 20 pips wide. This is saying that the pound itself. Let's see here if I pull up a pound chart. Pull the pound dollar up right there. And this one is, this is range bound. Okay, we have an hour and 21 minutes. This is saying that the pound would stay between 58.84 and 58.64 between now and 3 o'clock. So basically it's saying it's not going to make a brand new high. It's not going to break above. And check that out. We have a deviation level at 58.80. So I probably want to see the thing ticking down before I hopped in on that one. But, it's $34.58.80, but you got $58.84 for $22.50. Still not that bad of a price. And this one's for $89.50. So what does that mean? That means I can make $22.50 and I can make $10.50. All right. So if I put those two together, now it's like it's just sort of changing up. But if I put $22.50 and $10.50, what do I get? $24 or $34, right? So $34 of potential profit on that trade if it stays in that range, and which is a pretty sweet trade. And people go, well, I don't know about that because at $34 I could still, if I make $10 here, I could lose $70 there. That's a $60 loss, right? So that could be a little nerve wracking. Or if I make $20-something here, but lose $90 here, that's still a $70 loss. The trick on this trade is risk management. Just like I teach on the premium question, it's getting out if it hits your strike. Okay? So if it got up to 58.84, what is this binary going to be worth? If you know that answer, then you know the edge on binaries. This binary is going to be worth $50. So that means a $25 loss here. And it means a $10 loss on this one that we had down here. So if I lose 25 and I make 10, I lost $15. Okay, I hopped out of both of them there. I lost $15 on a $35 profit potential trade. So that's a great risk reward. Okay, it's range bound. I'm using deviation levels on a Friday, saying it won't make a new high. I have like a little bit of analysis in there helping me out. All right, I'm on two sides of deviations here, so really could give me just a really good solid trade to be range bound on. And here's a cool thing: you can close these things out. You don't have to wait, right? Not only can you close it out for a loss, you can close it out for a profit. So let's say you hop in on this trade and it goes up, and you bought in the trade at say $85. You close the thing out at 95. You sold this one, let's say at $25. You buy it back at 5 when it comes down. So as it's swinging, okay, then you're actually closing it out. And so you can actually remove the risk from one side or the other. And now that's a binary butterfly. And I'll do those, especially like, times like now when things are pretty quiet. But one of my favorite times to do them is actually whenever we go in and we have news. Because what happens a lot of times before the news, especially FOMC. I've done this live on the air a couple times. You can check out the archives or whatever there on youtube.com, TFNN Corp, I think. I know we have some of the archives also listed on the website, but if you go back and find the previous FOMC announcements, the statements, and I went in, I'll do like 4, 5, 6 of these butterflies all at once. And I think last time I did 3. The one time before that, I think I actually did 6 butterflies and 6 different currency pairs all at the exact same time. And because I had the stats on how far they moved before the news. And if you've ever traded on FOMC statement day, you know the market just goes flat like an hour or two before the news. Like nothing is happening. That's when to do these, when you know the market stays flat a majority of the time, because then you can capitalize on that flat market. Because what you're doing when you sell this 58.84 is you're saying it's going to expire at 3 o'clock below 58.84. When you buy this 58.64, you're saying it's going to expire above 58.64. So when you put the two together, you get double the profit. You get profit on two sides, and you're basically saying it's going to stay in between that range at expiration. Now, you could hold it, but then you increase your risk a lot, and you don't want to do that. You want to have a low risk, high profit, high probability. That's a good combination. Okay, usually when you go with high probability, you have increased risk. But with this, if you'll manage your risk correctly, you don't have increased risk. You actually have a higher reward than you do risk, and you have a high probability to go with it. And those are the things that you need to know to be able to be successful in trading, no matter what your trading method is. But if you want to be a day trader, swing trader, scalp trader, position trader, whatever it is, it's always going to come down to risk management. And this is one of the best ways to manage risk, because you get good risk, good reward, 1 to 3 or 1 to 1, usually 1 to 2 at least, and on these butterfly trades that I do. And then you also use probability. It's going to stay in a range, so it doesn't have to move up or down. It can stay flat or move up or down a little. And you're going to be able to go in and take advantage of things that you know, statistical, fundamental facts. The market goes flat before the FOMC statement. Just go back and look at euro dollar and different currency pairs like that and see how much they move up and down. And I'll give you those stats next week on Tuesday. We'll put them together so you can have a plan, and we'll even probably actually we'll do some of the trades right here live on the air next week whenever we're replacing the FOMC statement. So I'll also do a straddle or strangle on the FOMC statement. If I see a really good one, I'll throw one on there, like right there in the last second. We probably won't be able to carry that one in because the statement comes out usually right as the show ends, but you can at least see the butterflies right into the end of the show. And it's a pretty sweet thing to do. But to try to do this without the scanner is really tough because these prices are always changing. And, we've seen stuff move constantly just while this screen's on. And you got intradays and dailies and weeklies that'll all come together. And so you want to make sure you can see every possible potential trade that's going to work for your trade. And when you're doing a news, there's 2 different kinds of butterflies I do. Okay, I do one that's into the news. Okay, and then I do one that's before the news. So like the FOMC statement is going to be before the news because I expect that, like when the statement comes out at 2 o'clock or whatever, I expect major volatility. Before the statement, I expect a flat market. So I'll choose the 2 o'clock expiration. It'll expire, and then that thing will explode like right afterwards. Okay, so it expires just in time, and then I'll do into the news. So if I see something that maybe doesn't move that much. Or there's one other thing, and this is something that so many traders just lose sight of. It amazes me. I had one trader bring a system to me that he was working on, using some of the things that I taught him, and but also trying to just change it up. He's trying to make his own system with everything, and it was actually a really good system, but he didn't know that. He goes, "Man, I did this, and this is so bad." He just shared it with me. He was sort of laughing at it, and where he was. Losing, I'm not even kidding you. It was like 90, 95% of the time. And he had like consistent exits, take profits, all that in there. And I'm like, this is fantastic. And he's like, what are you talking about? I'm like, let's invert this thing. So everything that you thought you should do, let's do the exact opposite. Let's get in where, like when you said we should buy, let's sell. Where you said you should get out, let's, get in or whatever, So we just inverted the entire strategy, went back, and the results were phenomenal. Absolutely awesome system. I'm working with them on it. We're like expanding it across different, right now, all 4 indices. And then we're going to go into commodities and some currencies and work on putting the pieces together. But, whenever you see something, and the reason I bring that up is sometimes you'll hop in before a news announcement and it is way too expensive. I mean, it's just stupid. Okay, you go in and you're trying to do like a butterfly or a straddle or strangle, and it's just too expensive. It's off the charts expensive. And that's when I go in and I just go, you know what, if it's too expensive, then I'm going to be the collector instead of the payer. And so I'll just flip to the other side. And I'll be the guy that sells the premium instead of pays for it. And that works great. So, again, the whole point there being, if you see something that's just too expensive, that won't work, then you can be the guy on the other side of the trade. So be the guy on the other side. Be the butterfly seller versus the strangle buyer, okay? You know, if it's really cheap and it's just too cheap to sell, there's not enough in there, then be the strangle buyer instead of the butterfly seller. So, you know, don't lose sight of that. And we're seeing this thing. It's staying right in that range. It's doing a good job. It's working out to be a pretty good butterfly so far, right there between 58.84 and 58.64, and is the range on this one. And that one actually got up to, like, I think, 96 or something, so you could have closed it out already also on the bought one. And so the sell one's heading on down now. We had that thing up to like $30, and now it's down to $19. So if it goes down about $15 more, you can close that sold one out. And that's a good butterfly. Just while we're sitting here watching nothing happen on Friday, you're watching paint dry. Collect some premium. I had a trader yesterday that asked me about the Aussie dollar. They were looking at a short setup. I had the same short setup. They're like, do you think this is a good trade? And I'm like, it's a good trade. There's no reason not to take it, except for the fact that I don't think it'll move fast. I think it'll take a long time. And I think it's just going to edge down slowly. And this is on the Aussie dollar. And so I was looking at it. He was looking at it. Let me see if I can pull it up. And I was like, this would be just a great premium trend collection trade, because I just don't see it going anywhere fast. And so we're over here. This was actually the sell trade right here. And I was like, I just don't think it's going to move fast. I think it's just going to take its sweet little time moving on back down. And it did move down. It was a great trade. Look, we got right back down here. Okay? It's a perfect down move. Broke the low by a few ticks. I mean, it's a perfect move. But it took forever. And so I was like, I just sell premium on it. So we went in and sold. You know, I was looking at it when it sell a 92.82 strike and 92.85, I think, on that one, and just let it drop. As it drops and drops and drops, and then you just make premium on it. So you got premium right there on the 12 o'clock expiration, the 1 o'clock expiration, the 2 o'clock expiration, the 3 o'clock expiration. You keep going. I mean, this thing's just taking forever. You got a lot of trades in here. You got the 7 o'clock expiration. You got the 11 o'clock expiration. Okay? And then we actually break it before the 3. So, you get out of that one, and it starts pulling on back up. And, pulls back up. But even, if any of these expirations were all awesome all the way down. And I was like, this is going to be a great trade. It's just going to be slow. So how can you take advantage of slow but moving in a direction? That's a premium collection trade. Collect the time. Collect the paint drying premium right there. Okay? You don't got to be the payer for it. And I just want to challenge you to think outside the box. Get it down, understand, get your system down, understand how you're going to read the market, but then go, you know what, I'm trading options, but I'm not trading complex options. Okay? I'm not going to have to go in and deal with gamma, theta, delta, vega, get all confused by all of it. And I understand those things as well as anybody, and we can have a long conversation about them for an hour on each one of the Greeks, but I don't need them. It's so simple with these 2-hour and 23-hour binaries and spreads. You don't have to worry about it. All right, stay there. We'll be right back after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.6% profit to an incredible 48% profit in just one equity. And all 6 of those winning trades had been initiated no earlier than just the previous month. With the 600th weekly Gold Report issue fast approaching, Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began, and right now you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber, as this volatile gold market provides trading opportunities after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial to the Gold Report today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks. Welcome on back here at Diagnostic Trading Hour. Check out the leaders in the competition. We have the results, the final results on Monday. I know it's going to kill some of you. You're like, come on. What are they? So we're going to be finding out on Monday. But let's look at where we're at right now. And I want to remind you of something. For some of y'all that are sort of taking a break now, you're thinking you're just in the clear. We got W. Basuni right here. I'm going to murder all these names. I'm sorry. But right here, he's sitting here in 7th place at $7,000, and then just disappears. What happens? Disappears right here, and then he's in 1st place, $45,000. Okay, what happened was when they take this snapshot, and my guess is between 5 and 6 p.m. Eastern when the market's closed. They did the snapshot of the balance. Okay, the balance. Remember, Nadex, you put up all your risk up front, so any open trades aren't showing on the leaderboard, not until the final day. So it's not done till it's done. Well, apparently he closed some trades. And when he did, he closed them out for an insanely large profit and jumped way up. Now, we don't know how much he was making across here. I mean, he could have made $20,000, but then put on a massive position that drew him back down because he wasn't even in the top 10. But he put a massive position. So who knows how much he was up on this day. But as of snapshot time, he dropped below the list. But then he closed them back out on Thursday, and then bam, right back up on top of the list. And, total props to Gil. So staying on up there, got some consistency. Sort of guy who looks like hit a little bit on Thursday. Hopefully you made it back and knocked it out of the park again on Friday. Sort of rooting for you there. You're doing really good. Barr also keeping up, got some good consistency. Got up there on Tuesday, got up on the list, stayed up there in third place on Wednesday, stayed there again on Thursday. That's what I like to see. So to me, the most impressive thing is seeing that consistency of somebody staying up there. Now, I'm assuming that the guy in first place right now, I'm assuming that, he had a lot of open positions during that rollover time and it just cleaned up. Now, he made it cleaned up. Well, that's luck. Okay. Maybe, though, he was actually just, had some big positions. So, and then looking on over here, we got Bell. So 1, 2, 3, 4 days. And he climbed up. Man, look, he's fighting on the way up right there. 10th place, moving on up to 8th place, climbing on up to 5th place, keeping 5th place in the race right there. So just, really, really good job of staying in, having consistency, and just moving up the list. And, of course, everybody knows this is a demo account. Everybody's trading with really large, bad risk management. But even with bad risk management, at least they're pulling it off for a week. And I was talking to some other traders and everything, and one thing to remember about that is, this can happen in live trading. Okay? One of the traders I was talking to, he was talking to a trader, and he worked for, a firm, and the trader started with $5,000 and moved on up to $185,000 within a week. Yeah. $5,000 to $185,000. Flying up. He's on the phone, and this is like Tuesday, the day before Fed funds rate. And he's like, man, you need to take some of this money out. And he's like, thinking about taking out like 50. And he's like, dude, take out 150. You started with $5,000. Just withdraw $150,000. You have $30,000. Tomorrow is Fed funds rate. He's like, I can't tell you what to do, but I'm just telling you, you need to pull 150 out. And, don't go all in. Don't be trading real heavy. Walk away with the annual salary. That's a good week. And Fed funds goes heavy. Guy walks in the morning. He's looking at the account. Already knocked him down pretty hard. He was down to something like $30,000 that next morning. And then like 13 and then like $300. And the guy emails him. He's like, easy come, easy go. Take your profits, okay? When you do get on a lucky streak, take the money out and enjoy it, okay? All right. I hope y'all have a great weekend, and I will see you next week. Stay tuned for another great show coming up right after this.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.